David, Nicola, thank you so much for joining me in Studio 360 for the refreshed RESi360. How are you finding it, the conference?
Brilliant. I think it's been such a good way to just meet different people from across the sector, such a wide-ranging audience, but all with a very firm purpose and focus on supporting the residential sector as well.
David?
Yeah, I think we've had a long period of not getting together in person. I think just seeing the energy in the room and you sort of remember the benefits of coming together, and I think it's about the incidental meetings as well as the planned meetings. So yeah, so far so good, I think.
Okay, and you were both on stage with Marquis, and you were talking about demand for sort of green financing for residential development. This morning we saw 100 companies come and say to this trust, don't abandon net zero. We've actually seen a fair amount of ESG bashing in the press, as you pointed out, David. Has the sort of economic circumstances that we find ourselves in dampened demand for sort of green financing and green financing tools as people look to find something that's maybe a bit more cheaper and easier to do? Or have we kind of crossed the bridge, as it were, when it comes to green financing and people sort of recognise, particularly residential developers, given their, the unique role the built environment plays in carbon emissions, that actually they've got a unique responsibility to adopt greener measures?
So I think there's a couple of bits to that. I think we have net zero legislation, so that's there. I think we have to be respectful of the economic circumstances at global level, country level, company level, and individual level. So I think that undoubtedly produces challenges and different prioritisation amongst our client base. However, it's our view that sustainability is here for long term. It certainly is for us, and I think it's just about finding that intersectionality of where the economic side of it works with the sustainability goals, such as energy efficiency, things like that.
And I agree with that. I think there's an interesting dynamic at the moment where companies are wanting to do it for the purpose, the right part. There's equally the cost part of, I think, the initial investment, but actually what it could save over the longer term, particularly if we look at buildings. Some of the investments that go in the earlier stage of the building life cycle can actually save the ultimate end user money over time. So I do think there's that continued balance that we've got to get right, and that's very much where we want to help our clients on that journey as well.
And you were talking within residential development, and there's obviously, with the focus now on embodied carbon, there's a little bit more where people are kind of going, well, we need to focus more on sort of retrofit, refurbish first. Do you think there's a big enough appetite to do both retrofitting and the financing for new build development? Are there products available for people who say maybe wanted to retrofit homes at scale?
Yeah, sure. So I think what we've seen, if you look at some of the leaders in the sector, I think that the embodied carbon narrative has been very evident, and they've things like land security scheme in the city, British Land, and similar sort of thing, in terms of saying, look, we've tracked the embodied carbon. This is how we're saving that. This is why we've geared towards retrofit versus new development. So I think we're also seeing some interesting developments. Things like RESi have put out some guides about what does embodied carbon mean. So I think on embodied carbon, we're still, whilst the awareness has grown, we've got a long way to go. And I think it's quite a complex picture, because there's a bit about what finance can do to support that, but actually there's a regulatory piece as well around where does planning legislation lead to on that. I think in terms of, is there enough capital around the retrofit and the new build? I think, as I talked about a bit earlier on, that there's huge swathes of capital, both equity and debt now, aligned to sort of sustainable purposes. So I don't think or see that the availability of capital for either of those is a limiting factor. But as I sort of mentioned, it's not just the housing narrative on sustainability is much broader than just net zero. So as Nicola mentioned, there's a number of different drivers that we need to look at from a sustainability perspective.
And are you seeing a difference in sort of appetite for green financing within the different residential sectors? For example, obviously a lot of build-to-rent developers, providers are backed by institutional capital, where ESG funds are a little bit higher up the agenda. We had seen some criticism in the newspapers of house builders, for example, pushing back on EV charging requirements. So are you seeing that play out in the different, or even the student market, for example, where you might think that some of their end users are a little bit more eco-conscious than other?
So I think, as I mentioned a bit earlier on, when you look at things like the Glasgow Agreement on Net Zero that brings in loads of different financial institutions, a number of institutional investors in the BTR space will be aligned to that. They're committed to that. So, our conversations show that is filtering through to their net zero strategies, their sustainability strategies, but also their asset level strategies. I think where we've seen sustainable finance really kick on is things like social housing, because it's such an innately purpose-driven sector that has been able to translate into financing quite readily. I think on the house building sector, at the top end, we've seen a number of sustainability-linked financing. Definitely see that trend continuing, but I think where it's more nuanced, but actually potentially more impactful, is on the SME space, where there's a bit of a spread.
And that's the part, I think, that from a number of clients, different agendas. Some are seeing actually the ability of being that first leader, that one that's got those standards on their developments and things. Others are seeing actually what's the right balance of technology that's keeping improving. Do I hit go on some of the new technology now, or do I wait 6-12 months when we expect even more technology on it? And there's not a right and a wrong answer, and that's a continual dilemma that we're seeing some of the players in the sector go through. And that's where we really sort of want to be there to help provide options for them to go earlier, but equally it's not them we won't support, as long as it meets all regulations and things, we won't not support other ones that are maybe not as far progressed on that journey at the moment.
And quite a recurrent theme at RESi over the last 10 or so years has been modern methods of construction. And obviously, I think in the talk previous to yours, it was mentioned about these create more energy efficient, more sustainable homes. Do you see there being greater demand for the kind of products that you're financing for MMC developments and what you're seeing in the residential sphere?
Yeah, sure. So one of the examples that I used there around sort of Peel, an urban splash, that was how we looked at that from a sustainability context, was very much focusing in on the MMC and the whole life carbon. The low whole life carbon, and it also went into the clean transport strategy. So it's certainly something that at the top end of the portfolio, our loan portfolio, we see people focusing on, we see people targeting it, but also it's where we're deploying some capital, advantageous capital in terms of how it's priced. I think on MMC, one of the themes here today was around economic sustainability as well, and I think that's a big topic about how can we support that sector to reach economic sustainability, because then the environmental sustainability sort of comes off that. But it's certainly, when you look at the experts in the field, the carbon, especially embodied carbon impact, it is really clear, the narrative there.
And are you seeing demand with the SME sphere? Because obviously MMC requires a lot of upfront capital investment and is not necessarily cheaper than traditional builds, even if it is for the consumers at the end goal in terms of running their house.
It is. I'd say it's on the SMEs have so much to contend with, just so many different parts, and we hear more around changes in legislation, more around some of the challenges around planning as well. But I think it's a journey for them, definitely, in terms of then which direction they're going, and that's where I think some of the parts that we've been able to take from the larger house builders and just share that experiences across the sector. It's probably one of the most unique sectors in that sense, where that collaboration and sharing is now starting to come through louder, and that's part of some of the next generation.
Yeah, and as I mentioned, these are really difficult topics, and no one part of the market knows exactly the right answer. So I think there's a bit where we've all got to go on a bit of a journey, to Nicola's point about what does good look like, test and learn, what are the great case studies, and I think that's why we were really focused on the Next Generation Initiative. Is we saw it's got a long history, 10 years assessing the top 25. It's very transparent, everyone can go and look at it, how they scored, how does the criteria work, and now we've supported Next Gen to bring that into the mid-markets and SMEs, and we're really excited about that, because the response from SMEs has been really great, because more and more of them want to do more, but there's a limitation around labour, there's a limitation around knowledge, so anything we can do to help those that are willing to move faster is where we're sort of at, really.
And lastly, how does residential compare, I suppose, to other property types when it comes to embracing green finance? And then how does property compare to other industries in terms of embracing green finance? Sort of, there's that oft-repeated statistic, the built environment's responsible for 40% of all carbon emissions. So it's quite, but I feel a lot of the kind of popular and political focus tends to be on easy targets like airlines or the oil and gas industry itself.
Yes, so I think there's an important bit, when we talk about the built environment, we can talk about it sectorally, like the real estate sector, the residential sector, but actually I cover all sectors, and when you go into something like higher education, the built environment is a massive part of their footprint. So it kind of depends. When you zoom out, that's where those big stats come from. The built environment is involved in all sectors, and I think that's an opportunity and a risk. It's an opportunity for those in the sector to kind of lean across, into other sectors and say, hey, we've just done this, or we're doing this. How are you addressing that? So I think it's a great opportunity. It is a risk, undoubtedly, because it's a big impact sector. And I think we've still got some way to go to work through how best to navigate that, and things like clarity on regulation, minimum standards, things like that are coming, and I think a lot of market participants welcome that because they can then back solve to a degree what the future standards look like.
And you touched on it well earlier in terms of the earlier stage of the life cycle of the building, the ones we're building now or in development phase. We can make those changes. Actually, some of the wider part that we're sort of working through and haven't necessarily got all the answers yet is how you help existing buildings as well. And that's sort of, I think it's about 80-85% of the buildings are already built, and so there is a large part around that retrofit work as well to be done.
All right, well, David, Nicola, thank you so much, and I hope you have a fruitful RESi360. Thank you.
Thank you.